For today's price action, I wanted to do a quick video on Cloverhealth and technical analysis, amongst other things too. Well, as I was saying in the previous video, this zone right here was going to be a very important trough zone for the cycle analysis. Now I have this other cycle analysis line drawn here. Now, it doesn't have to line up exactly perfect, but it's pretty much like what I'm thinking, right? So, you could give that some credit. And for the past 4 days, we have been seeing the CVD go up, right? The price action cycle analysis has started to go up as well, and they pivoted today. Of course, we're on the daily chart, and the CVD cycle analysis still the overall 21 days in a bullish phase, just like the 21 day on the price action cycle analysis is on a bullish, cycle phase. Um, Now the weekly turning up, thank God for that, because like even after this bounce here, it was still just dragging down. But now it finally agrees that we're going up. So like this being down drove the 3 day down with it. So drug it down. Of course, you can see the CVD here, the negative, right? Now the positive. Um, you could actually call that like a divergence uh, between here. No, it's not that one. It's this one here, barely any divergence, but it does exist. Um, there was another one that I was looking at that had a really good divergence on it. I don't remember exactly where it's at, but using the 1 week time frame here and the volume profile, within a week, it's been more negative than positive. So there's a little more. The prediction is that it has more strength to go down than up, but you know there are other factors that play into this. So I'm going to get to that here in a little bit. So yeah, turn up is good, right? We didn't have this scenario here with the whale indicator on this one, and sometimes that's a good thing. Um, that means this one was actually the bottom, and then this is a double bottom now. So that's like the actual bottom here, and then now it's double bottom. Um, from what I'm looking at, you know, this cycle coming to an end here because all these little dots, that's the center of an end of a cycle, right? So if you zoom out a little bit, right here, you had all of them lined up. That was the absolute bottom right there. All those little diamonds. And they're mostly lining up here. You got the bigger ones over here. That's out towards January. Um, but as of right now, we're in this phase right here. So I was calling that out that we're going to probably bottom around that time. I was expecting a breakthrough, a slight dip, breakthrough $4, and then a spring. But I don't think we're going to get it. I think this is pretty much like a double bottom here. Um, so let's see what else we got. This is the way I see price action flowing, right? With this line here, with the higher time frames, right? Coming down to the conclusion here, and then eventually making its way down to, you call that the absolute bottom. Somewhere here now. Higher highs, higher lows, right? So the absolute bottom could be higher. It's an uptrending stock. Um, there are points of interest here and here, there and there. The whale indicator went off. These are some time frames that I drew in to describe when I thought the fall was going to happen. And again, and it proved it right here. I think this one had already occurred by then. So I was using a measurement on average of the cycles, you know, smaller time frames, larger time frames. And I had the larger time frames put up here on these lines on average there. You know, you probably do margin of error on both sides. And then you have to add this um, cycle analysis indicator as well as far as bottom. So they both come to an agreement somewhere around there. That's going to be about middle of January. Um, and this one here is probably going to be around. You see that one bumped it up a little bit. So you go somewhere middle of October. We should see the next trough go up until the middle of October, but the peak of it will probably be somewhere in September, according to what I'm looking at so far. Um, yes, so you can see the cycle, the long term cycle, this green one here, is still up and it even jumped higher. So that's a very good thing. The momentum is still down. It peaked up a little bit there, so that's a good thing. Um, on these candlesticks, usually the dark green represent like it's bullish, but it's not that bullish. Light green is it's getting there. It's more bullish than dark green. So how it went to this dark red to this light red, um, that's a good sign to buy. So giving that information there, and if we do try to like keep it on this trend that I have here with these lines, and it does come down to a bottom depending on where it finds support at, right? But if you call this line support, then you could say it'll find support at around $556 on this next. But that's saying that it went up to around $9, which doesn't look probable. Doesn't look like it's actually going to happen due to the options chain. I'm going to show you that in a minute. Um, I got a new toy, so I'm just trying to figure out how to work the options on that one. And this one here, this is the older model, but it serves some importance. It's 3 weeks out, saying it's more bullish. It says the same thing here is down. This long-term trend on cycle is down. It already reset it. We pretty much went through a reset here, and there's a divergence that I was talking about from here to there, right? So from here to there, there's that divergence. Anything in the blue is definitely going to be an uptrend. Anything in the red, I mean not red, orange is going to be the downtrend. Um, on these, it doesn't really show too much. It's stabilizing. That's about it. And now, I normally don't do like the longer time frames on here, but we're going to do that because it's very important to have the longer time frames. That way, you at least get a point of view, perspective, right, of what the weekly say, the 2 week, rather than just the daily. Because I've always been focused on daily. Sometimes I focus on the smaller time frames when I'm thinking about swing trading. But yeah, so let's see here. Let's go to the week. Now I'm actually going to delete this here because this was just like a theme rather than an actual, evidence proof based scenario. So you can see how these cycle is coming to an end now. It's starting to get to the point where it crosses. Once it crosses this green line, which is gonna should have already happened, but once it does happen, and that gets to that territory of value, according to this indicator standalone. Um, you can see we transitioned from negative here to positive here, the blue, and then the orange. But it's always pretty much been positive with this other um, indicator, the flow. These two are connected. So the overall regime is this gray and white. So the overall regime is positive. right? Which would be a positive cycle. Even though some of these pullbacks have happened, consolidation did happen because there was a massive amount of upsides move here. And you can see these areas here are areas of interest. Now the orange mean more than the red typically, but given the labeling that I've done orange as like the most significant selling area if you want to lock in profit, and the yeah, the blue being the most significant buying area if you want to buy the dip. So the green is like the little brother to the blue one, which is like buy the dip, but it's not really that much. Like this red one here, it's not really that much. But we're on the weekly chart now, so yeah, those they become more important at that time. So let's check out the 2 week chart. Now you can see the cycle in the background that I got here. This is one of the very first cycle analysis that I learned how to do before making any indicators and stuff like that. So it's a legacy. You got to have it still, right? Um, Here, that's where it pointed that out, and then technically, I think this here was the bottom of. Then it went up, which makes it a left-handed translation, rather than this one right here when it went up, which makes it a right-handed translation because it continued going up. The reason why this is a left-handed translation is because it only went up for a couple bars, or 2, 4, 6, 8 weeks, and then it started retracing. But then it popped. So that's basically what that's saying. Uh, and then over here, the regime on the 2 week. Now the 1 week it said it was in a bullish regime. This one says that it came to a conclusion from a bearish regime. Now it's turning over. So the longer time frame is suggesting that we've consolidated enough to the point where it's a good time to start adding to position or managing your investment. And you can see how right here it went down and it turned blue, which is a positive. So that's on the 2 week. That's on the 1 week. Now I'm not going to get too much into this because this is like the upgraded version, but I just want to have it there. So let's go over here. We could probably do the same thing with this one. I don't think it's going to hold too much more information, but let's check it out. April. Okay, so there's going to be a lot of weight there. Yeah, this one lines up with that. So this was a positive translation, and it won't get negative until around that time. Yeah, that makes sense. Somewhere, say the peak would probably be somewhere in the first quarter of next year if it continues to run. You know, trying to forecast the future is a pain in the ass. But as what it's showing me, as long as this trend maintains, that there could be a level of interest around towards the end of the first quarter as a top, probably for the year, and then it'll start consolidating again. That's if it goes on this bull run up till the end of the year. So conditions, right? And there was a lot of buying here. We already know that. Let's check the 2 week out. This 2 week says it can get up to about right there by that time, which is going to be $10. I don't know if it has enough momentum to do all that, but let's take it back to the 1 day. Yeah. Okay. So yeah, that was a good lock in profit, or do was it cover calls for the foreseeable future. But you got to throw in other data to go along with it. You can't just read the charts, right? I mean, like the backbone of it's going to be the intrinsic value calculation, because without that, why are you even looking at the stock? You know, like this, the intrinsic value calculation will bring you stocks that have potential. Then you got to do a little research to find out if it has that some kind of stickiness to it, moat, things of that nature. If it has if it has a future, basically, you don't want to get something that's been in the game for a long time. We're in an AI age, like you gotta use a little common sense there. So now let's try it on the weekly here. See what we got. Okay, so that was a buy signal. Then it did that. That was a peaking area, late peak, a lot of pressure. That was a buy signal as well. So a lot of selling. That's what triggered it. You can't go on the signals alone. You have to use your own due diligence. So on the weekly, we are coming back down. We already seen that before. The CBD is good. There's not a lot of it, so it doesn't go too far back. I need to fix that somehow, reprogramming the indicator. But yeah, so it's positive so far. It almost made it about halfway up last week's decline. That still looks negative. Of course, we're on a higher time frame, so that's going to be accounted for. Then you see all of this upwards pressure. Now on the 2 week, we got a hammer candlestick on the CVD. So I guess the best takeaway on higher time frames is probably going to be on this first chart here. When we go to the weekly, and we're on the weekly, see it bottomed out, and now the regime is turning back up again. We go to the 2 week, it's bottomed out. Let's just do this 3 week for the shits and giggles. It's in an upwards area. You know what? Freak it. A month. Oh, can't go that far. All right. So yeah, 3 week is good. It's turning positive. It's going into this state here. And I guess you could say this blue to orange going from orange to blue again brought this scenario here, 60 to 5, and it looks like it wants to repeat it, except there's more strength behind it this time because the regime is not in a negative scenario, it's a positive scenario, and it's up. And the 2 week is bottoming out, and the 1 week has already done that, and it's moving up while this price is going down. So I would expect this to roll over here. Do we have it on the 2 week? Nope, it's not enough data. All right, so right here on the 1 week. Once this bottoms out and rolls up, the price will probably already go sideways by then. But once it does, then there's a good chance that it'll do that and this, which led to that, and then this, vice versa, some other ones here. That one up to there, and it stagnated downwards. So that was seeing this type of action between this white line and the green line. I mean the red line. It suggested that momentum is so strong, it's just fading, and it's going to break eventually. Um, but it's not a full out break because it didn't go into oversold with this regime indicator how it did here. It went to oversold. I mean overbought. Excuse me. I don't know why I said oversold. Oversold is over here. Yes, and it did. Overbought. It didn't make it here. It didn't make it there. It sure in the heck didn't make it there because that was pretty much the crossover. But it did make it there. So yeah, it looks good. I like it. And if we decide to pull up this here, let's see if I can make it in big screen. There we go. Starting off with some dark pool data, right? Which is pretty much like it's not really the options chain, but it's, institutions. So it's fundamentally institutions that buy on this. So you can see if we're doing 250 market days, right? You can see that the $2 range it has the most participation, right? So I would call that the absolute bottom if the world ever came to an end. Then the $3 would be next, and then soon to be the $4. As of right now, the $5 resistance, so that's not counted as support until after we achieve to get above it. So that's where the resistance is at, and I think eventually there's a little bit right here at 395. Interesting, uh, but they're not too far apart. You know, it's at 66, 166 mil, and it's at 101 mil, right? Um, so I would say, like another 50 mil at $4 would put it even to the $3 one. So if another 50 mil is bought at $4, then it should have the same significance as the $3 level from that point. Um, Here goes the lower time, which is 150. Right, there's that four, 250, and then here it goes for 10 market days. Right, 50 market days. There's that resistance. 100 market days. You can see in 100 market days, right? It's been the important zone of interest within that time frame. And it's 150 market days. The next one is a $2. So, within that time, it's a shorter period of time. That's the reason why the $3 doesn't look that impressive anymore. Because the last chart I was showing you had more data in it from longer term time frames. This one does not. This one has a shorter term one. So in the short term, right, the $4 is more significant than the $3. So that's saying something. So and then, like I said, the 250 days. So we're going really far out. And then if we do the options chain and the delta and the gamma and all that good stuff, pain. Okay, so this is the reason why it's not going to break $4. Is because there's a sell wall right here at $4. $4.50, somewhere in that level. So gamma flips at $4. Yeah, and then there's a call wall, right, at $5. So it's basically going to pivot between those two walls. And then this is on the short term though. Can't remember this in 90. So that's like 21 days. And let's see, 90 January. Okay. So there's a huge call wall at $7 during January. Put wall is at $4.50. So once we manage to break $4.50 and hold this support with the dark pool stuff like that, then there's a good possibility we could see this $7 call wall before returning. So you puts calls. There was also a call wall here at $4. Gamma 50 cents. Call wall. Max Pain is at $3. Put walls at 450. Hmm. Yeah, I'm still new to this, so I'm trying to, learn as I go. It's all about studying in it. Call wall at 5. Gamma flips at $4. So yeah, we held above $4. Now once we break 450, $5 is going to be on the table. But as soon as we break $5 and hold it as support, $7 is on the table, from what I understand about options. But I need to do more studying, more research on this type of stuff. Okay, so that's that. We can put it here. Now let's look at the order book, the order flow, right? The Where is resting orders at? Significant resting orders. See right there, it's at 550. You could say five to get exactly in the middle of this one. It's like 560. There's a huge wall. Was that 730,000 shares right there? That's pretty impressive. I believe that wall's going to dissipate the further in time that we go. Um, if not, it could be bought out. So let's see here. Now, as support, it there was also some significant support around $4 that I seen on the order book. See, I drew this here at $3.90. But if we take a look at all of the previous days, or yeah, market days, and you try to get all of these areas like this right here, this right here, and this right here to line up with each other day over day. You could say start off with this one here. So it succeeded there, succeeded here, succeeded here. It almost succeeded here, so it needs to go up a little bit, but it needs to stay low enough for that other one. So right there at $4.01, that's when you get all of them. This one, this one, this one, this one, and this one, all simultaneously showing areas of support. You know, so that adds. I think that adds more. What is the word I'm looking for? That adds more. A foundation to my thesis, right? So that is where book map stands. Now, how much money was on the table at that point in time? Let's go here. It's going to be not too much, actually. That's probably all retail. The dark pool is different. You got big, huge fucking numbers in the dark pool at $4. But this is probably going to be all retail right there because retail can't access dark pool, only institutions. Oh, maybe they can, but they got to be rich. Um, yeah, we did the dark pool, we did the order book, we did the charts, and we did there was the options chain. Yeah, there was the options chain. So, I'm feeling pretty good about it. I want to say that our first real retest is probably going to be anywhere between $6.50 to $7 before we see some type of resistance being made. Like significant resistance. But of course, we do have it at $5.50, give or take 10 cents for margin of error. Um, but the option change does soften up throughout the rest of the year. So there's not, as far as the book is concerned, there's not too much resistance once we get past, I would say, a week or two from now. Once we start getting into September and October, things become more bullish. Especially, liquidity is drawn to high areas of interest like that $7. That would be a call wall, but it would be drawn to the wall, just like it was drawn to the $4 put wall. It will be drawn to the $7 call wall. At least for my understanding. It doesn't have to make it exactly to it because it didn't make it exactly to $4, but it's going to be drawn. It's going to be like a magnet. It's going to be drawn to that area. And if you understand how the house plays the game, all you got to do is just go with the flow, baby. Shit, go with the flow. Um, but I'm still learning, so you know, this is not financial advice. This is not anything important. This is just a guy has a little YouTube channel, little bitty YouTube channel that talks about things like this. And I know I had a request on my YouTube channel to take a look at another stock. Unfortunately, I'm not going to be able to do it today, sir, but I will check it out this weekend and I'll make one just for you. I can't remember the name of the ticker. I got to look it up, but yeah, I'll do that later on the weekend. All right, you guys, you have a good one. I'll see you on the next one.